Real estate and stock market? Real estate or stocks, which is a better investment? We inform you which one is best for your investment, make and save your money. Hello guys, in today's video we will explain you about the differences between real estate and stocks and which one is a better investment. Comparison: real estate versus stock market. Investing in real estate or stocks is a personal choice that depends on your financial situation, risk tolerance, goals, and investment style. It's safe to assume that more people invest in the stock market, perhaps because it doesn't take as much time or money to buy stocks. If you're buying real estate, you're going to have to save and put down a substantial amount of money. Returns: real estate versus stocks. Investing in the stock market makes the most sense when paired with benefits that boost your returns, such as company matching in a 401k. But those perks are not always available, and there is a limit to how much you can benefit from them. Investing in the stock market independently can be unpredictable, and the return on investment, ROI, is often lower than expected. Comparing the returns of real estate and the stock market is an apples to oranges comparison. The factors that affect prices, values, and returns are very distinct. However, we can get a general idea by comparing the total returns of the SPDR S&P 500 ETF SPY and the Vanguard Real Estate ETF Total Return VNQ for the last 17 years. Risks: real estate versus stocks. Real estate. Here are some things to consider when it comes to real estate and the risks associated with it. The most important risk that people miss is that real estate requires a lot of research. It's not something you can go into casually and expect immediate results and returns. Real estate is not an asset that's easily liquidated, and it can't be cashed in quickly. This means you can't cash it in when you're in a bind. Stocks. The stock market is subject to several different kinds of risk: market, economic, and inflationary risks. First, stock values can be extremely volatile, with their prices subject to fluctuations in the market. Volatility can be caused by geopolitical and company-specific events. Say, for instance, a company has operations in another country. This foreign division is subject to the laws and rules of that nation. But if that country's economy has problems, or any political troubles arise, that company's stock may suffer. Stocks are also subject to the economic cycle, as well as monetary policy, regulations, tax revisions, or even changes in the interest rates set by a country's central bank. Pros and cons: real estate. Real estate investors have the ability to gain leverage on their capital and take advantage of substantial tax benefits. Point 1. Although real estate is not nearly as liquid as the stock market, the long-term cash flow provides passive income and the promise of appreciation. Pros: 1. Passive income. 2. Tax advantages. 3. Hedge against inflation. 4. Ability to leverage. Cons: 1. More work than buying stocks. 2. Expensive and illiquid. 3. High transaction costs. 4. Appreciation isn't guaranteed. Pros and cons: stocks. For most investors, it does not take a huge cash infusion to get started in the stock market, making it an appealing option. Unlike real estate, stocks are liquid and are generally easily bought and sold, so you can rely on them in case of emergencies. With so many stocks and ETFs to choose from, it can be easy to build a well-diversified portfolio. Pros: highly liquid, easy to diversify, low transaction fees, easy to add to tax-advantaged retirement accounts. Cons: more volatile than real estate. Selling stocks can trigger big taxes. Some stocks move sideways for years. Potential for emotion-driven investing. Advantages of investing in real estate. There are many positive benefits to investing in real estate, including depreciation, writing off wear and tear of a commercial property, tax deductions, and, finally, you can sell the property through what is known as a 1031 exchange, and will not have to pay capital gains taxes, as long as you invest the money into a similar property type. Disadvantages of investing in real estate. Like all investments, real estate also has its drawbacks. Most importantly, the investment is illiquid. When you invest in a property, you usually cannot sell it right away. In many cases, you may have to hold the property for several years to realize its true profit potential. Also, the closing cost can add up to thousands of dollars and include taxes, commissions, and fees. Further, real estate prices tend to fluctuate. While long-term prices generally increase, there are times when prices could go down or stay flat. If you have borrowed too much against the property, you may have trouble making the payment with a property that is worth less money than the amount borrowed on it. Finally, it's often hard to get diversified if investing in real estate. However, diversification is possible in real estate, provided that you do not concentrate on the same community and have a variety of different types of property. That being said, there is an additional way that you can be able to diversify in real estate through real estate investment trusts, REITs, under which you can purchase a trust that is invested in a large portfolio of real estate and will offer you a dividend as a shareholder. However, in general, stocks offer more diversification because you can own many different industries and areas across the entire economy. Stocks. Using the S&P 500 as a benchmark to illustrate the performance of stocks, the stock market has had an average annual rate of return of 10.31% from 1970 to 2016. It's important to use this figure as just a benchmark for the performance of U.S. stocks, as there are several other major indexes globally. With a stock, you receive ownership in a company. When times are good, you will profit. During times of economic challenges, you may see diminishing funds as the earnings of the company drop. Taking a long-term approach and being balanced in many areas can help build your net worth at a much greater rate compared with real estate. As with real estate, financing in stocks allows you to use margin as leverage to increase the overall amount of shares that you own. The downside is that, if the stock position falls, you could have what is known as a margin call. This is where the equity, in relation to the amount borrowed, has fallen below a certain level and money must be added to your account to bring that amount back up. If you fail to do this, the brokerage firm can sell the stock to recover the amount loaned to you. The advantage of stocks. Stocks are very liquid, quick, and easy to sell. They are also flexible and can even be reallocated into a retirement account, tax-free, until you start to withdraw the money. Also, many stocks can do considerably better than real estate in 1 year. Due to the volatility of some stocks, it is not unusual to see companies that are averaging 20% or even 50% growth in 1 year. The disadvantages of stocks. Stocks can be very volatile, especially when the economy or the company is facing challenges. Also, stocks are often emotional investments, and your decisions within the market can often be irrational. Finally, bankruptcy is always in the back of the active stock investor's mind, as it should be, as your investment will be dissolved in this instance. Subscribe, like, share, and comment in the comment box. And tell me which one is most better. Overview. Real estate and stocks both present risks and rewards. Investing in the stock market gets a lot of attention as a retirement investment vehicle, particularly for people who contribute regularly to a tax-advantaged account, such as a 401k or individual retirement account, IRA. However, diversification is important, especially when saving for the long term. Investors should opt for a variety of asset classes or sectors to reduce their risk. Investing in real estate is an ideal way to diversify your investment portfolio, reduce risks, and maximize returns. Keep in mind that many investors put money into both the stock market and real estate. And if you like the idea of investing in real estate but don't want to own and manage properties, a REIT might be worth a second look. Today's advice. If you are born poor, that's not your fault. But if you die poor, that's your fault. Keep your supporting. Thanks for watching. Make sure to subscribe and press the bell icon for latest notifications.